is this a massive bull trap or a crypto shakeout? Well, we're going to address that on today's show. Either way, it presents a trade opportunity. So without further ado, let's get straight into it. And let's have a look over here. James, you just have to share the bubbles chart for me. All right, there we go. If you have a look over here at the crypto bubbles, you can see that the market is indeed pulling back, but on the hourly, it is starting to rebound already. So we are finding a certain level of support. And let me know in the comments before we do get started if you are present. I see Simon is here, Human, Mackie, Bob, Dean, Will, Nomad Dad. I see Banter Girl. Welcome back. Banter Girl, let me know, is Banter Boy your husband over there? Geo, I see you also in the comments over there. Give the video a like, help it get out there with the algorithm. It would be much appreciated. And let's get into the charts over here. So if you have a look at the quarterly chart, we did get the quarterly close, which is also the monthly close and the weekly close. And all in all, it was pretty strong. It closed above key pivotal levels. On the quarterly, though, we're still below an important resistance line, which would be expected. You can see if I zoom in, that 28,992, we wicked into that zone, and since then we've come down. Now, what does this mean? Well, it means that you have an easy invalidation. If you are shorting the market, then this is definitely a high time frame resistance zone, which means that pretty much a lot of the bears will be shorting with their stop loss just above that prior wick, which is also the monthly wick high. So if price does get back above that wick, and that level would come in at exactly 29,380. Anything above 29,380 would then be either a liquidity grab or it would stop out the shorts, and consequently price would start to push a little bit higher. And then we move from level to level. So that's the quarterly chart. I thought it's still worth looking at. It's not mega relevant now because these things play out over many months, but nevertheless I thought let's quickly show it. And then how does that tie in with the monthly time frame over here? Well, one positive sign is you do have the 7 MA as well as the MA50, which is now starting to curl back up, and price has eventually regathered those. Remember, we were stuck below those for such a long period of time, and the natural consequence of these turning up and price holding above that is that you have the MACD, which is continuing to strengthen. So that means there's a lot of room left over the next couple of months for this to continue upwards. And then you have the RSI as well. Let's have a look over here, which has now officially closed above the moving average, and the moving average is losing its downward aggressive move, and it's starting to slowly start to turn back upwards. And then the same thing is with the stochastic RSI. Look at the same. If you zoom out, we spent the same amount of times in the previous bear markets at the bottom, and then we've started to curl back up. We don't trade this in isolation. We obviously use it in combination with everything else, but all in all, for the investors, it is showing you that technically dip opportunities that come into support, keyword, they come into support, are opportunities to get into the market. What about the weekly chart over here? Well, you can see that you have 2 candles in a row that look like this. I would expect that we have resolution. So indecision candle 1, indecision candle 2. Let's just quickly grab that cursor. Give me 1 second. This will make it easier for you. I always forget. There we go. So we got 1, we got 2. Will we get 3 in a row? Let me know in the comments. Do you think that we get 3 candles that look like this in a row? I don't think so. I think that either we get an expansion to the upside or an expansion to the downside this week. Look, the market is definitely due for a pullback. If you do see a pullback, then you have the obvious lower levels on the high time frame that come into confluence for an area where you could add to your position. That being the high time frame horizontal at 25,500, as well as the rising 200-day or 200 moving average on a weekly chart. So that would be the level if you do get expansion to the downside, where you want to see demand kick in and then price to bounce off of that level. I'm going to show you on the lower time frames the possibilities for why price could still potentially go up into that 30K level. I'll give you the evidence, and then you can make your own decision if that's something worthwhile for you to play for the upside move first. But moving into a couple of other things that have been going on more in the traditional markets, I think Simon Dixon sums it up pretty well over here with everything that's happened over the prior week. So he says last week, and guys, a lot has happened over here, and you need to ultimately determine which currency you want to be holding, whether that be Bitcoin or whether you want to be holding dollars, euros, yuan, yen, etc., because there's a lot that's going on. He says, yeah, Saudi Arabia enters into a trade alliance with China, Russia, India, Pakistan, and 4 Central Asian nations to step further away from the reliance on the US dollar. So through everything that's going on over here, you'll see it's almost like a massive attack on the US dollar. China and France complete the first LNG gas trade using the Chinese yuan, ending reliance on the US dollar for energy trades. China and Brazil to settle trades in their own currencies, ditching the US dollar. Then you have Brazil, Russia, India, China, and South Africa. So the BRICS countries are developing a new currency, State Duma Deputy Chairman says. Then you have Saudi Arabia partners with China to build a Chinese oil refinery for 83.7 billion yuan, so $12.2 billion. Kenya signs a deal with Saudi Arabia and the UAE to buy oil with Kenyan shillings instead of US dollars. President of Kenya tells citizens that they should get rid of US dollars. I don't know if you guys remember that. He came out in a press conference and he said to his Kenyan companions that, listen, I think that it could be wise to start ditching the dollar and you have a couple of weeks to do so. Sounds like 𝗵𝗍𝗍. And then he says associations of Southeast Asian nations consider dropping the US dollar, euro, yen, and British pounds for local currency financial settlements. India is to settle trade in Indian rupees with certain countries instead of the US dollar, Commerce Secretary says. And then Chinese yuan surpasses the euro to become Brazil's second largest currency in foreign reserves. And essentially, why does this matter? Well, it's showing you that, you know, usually when we work with Bitcoin, it's predominantly being measured against the dollar. But if you go and look compared to all other currencies, Bitcoin has over the years outperformed every other major currency. So you have this whole currency war thing that's going on. And I think that one of the ultimate plays could be to still purchase Bitcoin, at least as long as Bitcoin's in an uptrend. Then at least that's where I am placing my bet, especially when you have all this chaos, because the currency wars can create major fluctuations in those currencies. You can see wild swings similar to what you've seen in crypto. So Jason says over here, and he says, put on your tinfoil hat for this one. But step 1, Russia. Start a war in Europe to force NATO to boost military spending using printed money, increase inflation, and as a bonus showcasing to the world that the US has unapologetically weaponized the US dollar. Step 2, then you have China. Use Chinese-backed shell companies to cause a series of Western bank runs, create a bunch of fires that the Fed has to scramble to solve by unleashing the printer. Therefore, unleashing the printer further devalues the dollar in the long run. Step 3, Saudi Arabia. Reprice oil in something other than US dollars, again forcing America to scramble and print more dollars to try and save their currency and their economy. Step 4, sit back and watch the rapid demise of the US dollar as a global reserve currency. In the fray, take Taiwan. Well, that hasn't happened yet, but he says, I don't know if this scenario is real, but if it is, the best shot that we have is to print US dollars to buy Bitcoin now. And he says this is a national strategic emergency in his opinion. So very, very interesting times. Let me know in the comments what you think. I mean, you know, they say oftentimes with everything that's happened throughout the history since Bitcoin was created, that Satoshi couldn't have written the roadmap any better. And I think that this ties in really well with that. It can't stand more true. It just seems time and time again that Bitcoin is standing out more and more like an option. So here you have this morning with the futures oils gapping up after the OPEC news. So with OPEC that they're cutting their production. And I thought, well, what does that mean for the markets? Well, if you look historically, Rika says over here that I'm no macro expert, but I'm not too bad in putting puzzles together, cross-analysis with charts. People are sad about oil going up and thinking that it's bad for stocks. It's not bad. What is bad is if oil drops off of a cliff, then that's bad. That creates a deflationary bust. So if it falls off a cliff like it did during COVID, but we're probably unlikely to see 2 black swan events like that in a row, one after the other. So overall, it's showing you that if oil goes up, it's typically okay for the stock market. It doesn't mean that that's going to nuke the stock market. The stock market can also technically go up. And over here, overlaid as well on a live chart, you can see it. Here you have crude oil and then you have Bitcoin. For the most part, they more or less move in the same pattern. So I don't think that oil shooting up now is necessarily anything major to be concerned about. But with the dollar, we had outlined this for quite some time. So looking for the dollar to meet its ultimate target at about 104.83, which is coming in right over here where I mark the X. And here it is, right? You got simply a low, and now you have a high low coming off of a key horizontal level, and you're waiting for that to push up. And so far, it's doing so. It's just everything is happening very, very slowly, but it is still happening. Looking for this to potentially push up, reclaim the key yearly level, and then we can reevaluate from there. Tying that in with the VIX, the volatility index for the S&P 500, you can see this is also contracted to those extreme low levels. What does that mean? That means potentially start to pay attention because maybe the relief rally is starting to come to an end. Remember, we played this whole market move as a relief rally. And the reason why is because the market is still in that contraction phase, right? So a relief rally with the potential that it could potentially flip into a bull market at a later stage. So the prior stock market top that happened in November of 2021 happened when the VIX contracted all the way down to 16. So let's see what happens over here. Anytime that it's got into this box in the prior year, it's had a strong reaction out of that box, and then an increasing VIX. When the VIX shoots up like that, we know that the stock market does go down. So let's have a look at the stock market. Remember, we've been playing the stock market very simply in a range, and I mentioned this a million times. I'm sure it sounds like a broken record, but that's the range. We're playing the stock market within a range. We said that the main range that the market is caught within is caught between the mid-range and the 0.75, and we're waiting for a successful breakout. Remember, look, we've been stuck there since February, so that's an entire month that we were stuck between the mid-range and the 0.75 level, so 75% of the way through that range. And now, as of last week, we've started to break out of that range towards the upside. So your next target is obviously, as soon as we started to close our first candle outside of there, we then target towards the range high, which gave us a little bit of a bias for potentially one more further push up in Bitcoin, which lines up with a liquidity grab around that $30,000 to $33,000 level. We'll get more into the nitty-gritty details of that after this chart, but essentially you'd be looking for potential continuation over the course of the rest of this week into that range high. And then that's where it's time to be careful, right? Because why? You're coming into the range high. It could turn out to be a deviation, while simultaneously the VIX is coming into these low regions where we always have a reaction. So if Bitcoin does push up into that 33K level, 30K level, whilst you simultaneously have the S&P coming into this zone and the VIX contracting into those low regions, then you have a triple confluence that you're coming into high time frame resistance on Bitcoin, you're coming into the range high of the S&P 500, and you're coming into a historical significant level for the VIX, which means time to pay attention. There might be a deeper pullback that comes from that level. TED Talk shows over here that if you look at the volatility though of the bond market, he says the Fed have done their best to calm the bond market with the BTFP facility recently, which is essentially money printing, right? Historically, when the Fed have lost control of the bond market, then volatility goes up and risk assets have sold off. However, when the Fed gain back control, then the volatility of the bond market goes down, which it looks like it could have achieved for now, and then consequently risk assets bottom. So if you look at the volatility over here, here it is, COVID-19, and then look at this, unprecedented tightening, he says over here. So we got even higher up than what we did in COVID-19, which is absolutely crazy. That is for the bond market volatility. You guys know, you saw the bond markets are meant to trade in a very stable fashion, and they were trading like illiquid altcoins, going absolutely berserk. And now you have it starting to come down, showing that maybe the Fed have calmed the bond market down, and consequently risk assets can bottom. Now, what that all means, tying this in with also the OPEC news and everything that's going on around that, if this is forcing the hands of the US to ultimately print money, that money typically goes into assets, right? Assets like stocks in the NASDAQ, in the S&P 500, and since they trade, since Bitcoin trades with a higher beta or higher magnitude compared to those, then you would expect that Bitcoin would also catch a bit. So we're definitely at a very, very pivotal point within the market right now, and we have to be hyper focused, because we could be on the cusp of transitioning into a bull market, but at the same time, we could be right at the very, very pico top of the relief rally, and we could be coming a lot lower, which means you have to have your thinking hat on and be hyper focused right now. Now, what does the economy say? Well, if you look over here, you can look at the PMI data, which is going to be released later on today, ISM Manufacturing PMI. This helps to evaluate whether the market is in a contraction phase or an expansion phase. It's coming out at 4 p.m. later on today, and the expected result is a move down from 47.7 to the new forecast is 47.5. Simply put, anything that's under 50 means that the markets are contracting. The global economy is, or not the global economy, but the GDP is contracting. And in a contracting environment, you have to treat rallies in crypto as relief rallies. If it's above 50, you can say that the economy is expanding. That's a healthy economy. And it means that you can be obviously, you can be more aggressive with your investments, and you can also be more diversified, right? That's when you can consider things like altcoins and things like that, because you know it's up only season. Right now, it's still a dangerous time to be long. Of course, I've played the long side pretty much almost from the bottom right to where we are now, but now it is time to start to be very, very cautious and careful. Okay, next. Looking at Bitcoin on the 4-day chart over here, you can see we failed to break above that key important zone at 28,242. So you can see a clearly defined range that's forming over here, right? Look, I don't know if this is going to be the new range that's going to hold, or if we're going to actually first break out, if we might get one more sweep up and then come back in. But ultimately, we are looking for Bitcoin to establish a new range, and this would be a good place for it to do so. The place would be anywhere between that 24.5 and 25,500. So this region over here, this would be a good zone. And even if it's around this zone over here, maybe you push a little bit higher. But over the coming months, I'm looking for a potential range to get established over there. So all this chart is telling you, this is using our short-term moving average, medium-term and long-term. You want these all crossed up, angled upwards with price holding above. If price starts to come down below this, all that means is if it pulls back towards the green moving average, which is at 26,000, it's an opportunity to add to your long positions. And then you're looking for one more push up after that, and you can reevaluate. Okay, moving on. Let's have a look over here. Liquidity. If you look at the liquidity for the US net liquidity in the United States is starting to come back down. Look at the histogram as well, the major drop off from the People's Bank of China. That liquidity injection histogram has fallen off a cliff, and it's no wonder crypto is pulling back. So definitely still correlation that's over there. And then if you look at the major central bank assets, this one hasn't fallen off too hard yet. It's still mostly up and holding where it was previously. But the one that matters most, I've mentioned a million times, is the US stablecoin supply. So we want to see the USD stablecoin supply hold sideways and then slowly but surely gather momentum to the upside. And that will all line up, guys. It's all one big trade. Everything lines up, right? If you start to see that the PMIs go above 50 and the economy starts to expand, you'll probably see that the stablecoin supply ratio will tick up. You'll see the liquidity pick up. You'll see the stock market break high time frame resistance. The dollar will start to, or the DXY will start to trend back down. All of these things will tie in together. It's all just one big trade, and you need to play it all together. Okay, let's move on over here for Bitcoin. So very simply, same thing as last week. Nothing has changed yet. We've been consolidating into that resistance, and we're looking for either a deviation from above here or a deviation higher up. Now, could the top be in? That was a swing failure pattern. Of course, that could be. But I still think that there could potentially be one more last push up, one more spike. That will be your final chance around 30K, and it's going to come back down. That's your chance to take profit and then enter a beautiful short trade. Okay, until it happens though, we don't have anything confirmed yet. So the levels that you're looking at, you want to see that this zone holds over here where those previous lows were put at 26,500. As soon as you start to cross below that, then of course you're going to pull all the way down into that that prior range high at 25K, and then that would be where you would be looking to potentially add more to your position. So if you are short here, this is a sensible short trade setup, which I did outline to you guys. It's been in the Discord. I did it live on the show as well. It's from a structural perspective, it makes total sense that you would short with your stop above there. And then as long as price can't get back above there, you're holding your short back down to 25K. So we're just playing it level to level. And the question always was, are we gonna operate within this level first, or are we gonna get back above and then operate within that level? So the market is very much in the same place as it was last week. The only difference that I can say over here is that the longer that you consolidate up against resistance, and new people don't understand this because obviously it's resistance, right? And you should sell it. But look at the wicks. That's all that you need to do. Let's zoom in over here. So we can see the clearly defined resistance marked by the pink box over here. Now look at the wicks over here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 wicks into that area. What does that mean? Well, firstly, it means a couple of things. The first thing it means is that the more times that you knock into a resistance zone, the more likely it is that you're eventually going to crack through that. So if you continue to grind into resistance without breaking down, it opens up the possibility that price can obviously expand through that. Not only that, but shorts have had 2 weeks to build up positions over here. Literally 2 weeks of time has passed in which they could build positions up here, which means that their stops are all somewhere within this region, which means that it opens up the possibility that you have a massive liquidity grab potential. And that's one big reason why I'm first looking for price to potentially push up to that 30K zone before coming down at a later stage. So I hope that helps. That is one thing that I'm focusing on. The next is, where are altcoins within this entire market cycle? Now, I found this interesting because most of the time we look at this altcoin season index over here using this scale. I don't know what the scale's put on. I think it could be a daily time frame, and it's showing we're at 24, right? The further you move to the Bitcoin side, the better the risk to reward is for the altcoin trades. If you start to find lining up with your technicals that there is potentially a major bottom. But if you move it onto the months chart over here, then this is actually one of the lowest levels that we've ever seen. So there you see it. We went down as low as 1 on the 25th of March 2023, which was just a couple of days ago. Altcoins were getting absolutely smashed. And I think that maybe soon, if Bitcoin does start to bounce, then some of those profits are going to start to filter into altcoins, because we haven't seen these levels for a long time. You know the saying, buy when others are fearful and sell when others are greedy, and others are 100% fearful on altcoins now. I mean, you don't get worse than 1, right? The only thing below 1 is going to be 0. So that's what I'm watching over there. That's the one thing. The next is, if you line it up over here with the 𝗬𝗍𝗍 chart, it's still failing to break down this diagonal over here, which means you do have a potential trade setup. So if you are looking at certain altcoins, you could potentially add small amounts to your position and look to build a position within this level, because you have a clear invalidation. As soon as you come down below the 0.0622 level, which was the prior wicks, until you come below there, especially on a closing basis, you have an invalidation point where you could go long. Anything under that, and it's going to go down another 25%. So if Bitcoin goes down, of course, alts are going to go down harder. But if Bitcoin can hold up over here and start to bounce, you could potentially get a major bounce within altcoins. So do keep an eye out on that. Total 2 is doing the same thing as what I'm talking to you about Bitcoin about, whereby it's grinding against resistance. This is eventually going to crack through. I mean, if you don't have continuation to the downside soon, and bulls can continue to hold price up here. This is a 3-day chart. So since the 14th of March, pretty much you've had shorts that have been building up on altcoins around this region on total 2, which means there is a potential that when it does break, you're going to have a violent breakthrough to the upside. Now, I'm not saying that you should blindly long altcoins over here. Just for the record, I'm not longing. Okay, I did take a long on Ethereum. I'll show you the trade setup that I have. That's the only trade that I have. I'm not long in any other altcoins whatsoever, because you need to wait for the trigger and the confirmation. You need a trigger plan. You can't just blindly long just because the altcoin index chart is telling you that it's at one of the lowest levels ever. You need to wait for confirmation that the bottom's been set, a break-in structure, and then it's time to go long. And we haven't seen that yet. I'm just warning you that the time could be coming, and that's why you want to be watching that. Okay. Here we have this chart over here, same thing. So this is ultimately the new range that we're looking to have established between 25,000 and 31,800. Currently caught just below mid-range over there at 28.7. So mark those levels off on your chart if you don't already have them. Now, let's dive a little bit deeper into the whole liquidation levels, because I think one of the liquidation level experts is 𝗪𝗏𝗍𝗍. Big shout out to him. He always does a good job over here, and he writes a thread. He says, is there any confluence for price to go to $29,000 again? Well, we can find liquidity to the upside at $29,000 in the order book. There's also an interesting imbalance in the 1 hour time frame at 29. So it's definitely a possibility to consider. And there you can have a look at it. So price is currently in this region over here at about 28. At 29, you can see the liquidity is stacked. These are shorts. All the guys that went short, this is where their stop losses are. So that's the one thing. The other thing over here is, he says, it's too early to say that this was the top. It's holding pretty well for now, but I think that will go back to 29K at some point due to some imbalances in the candlesticks from that move up. From here, I can't discard a push higher. Play this with caution. So again, watching the same thing over there as what I'm looking at. Then he has over here, if you look at this, if we check for these zones with liquidations, then we can see that 29.5K is an area of interest. So yes, there is enough confidence to believe that a push back to 29,000 or even a little bit higher can happen before a retrace. I'm looking for a little bit higher. I'd like to see 30K just because it's that psychological level. That's when people start to get mega bullish. I won't open this up. It's basically lining up with what he just said over there. What about 30K says? It's a psychological zone. So exactly what I just said. But I can imagine that some people that bought at that zone months ago will want to sell there to break even. Will the market give them this opportunity? I'm not sure. I'm not sure if people want to sell there. I know that Michael Saylor has his average entry price at about that point by now. So if he was a seller over there, that would be pretty catastrophic. That he would be a big seller. Definitely nuke the market over there. And then if you look over here, the drop that happened with price over the weekend has now also opened a CME gap at 28,735. So these CME gaps have a high probability of being filled at a later stage, which means pullbacks that come from here could be opportunities to get long, and then you're looking to play that up one more time. So he says if we don't see a straight dump from here, then this will be a projection for BTC at the end. It's still the same result. He's expecting a retrace to 25K at least sometime soon. And that's what I say to you guys as well. That 25K, 25 to 25,500 is going to be tested at some point. Whether it's going to be now or later, that is going to form a major high time frame area of interest. And what's so important about that area as well, and I just want to show this. Let's zoom out. I have mentioned this before, many times before, but I'll mention it again, right? So I'm just going to use the highlighter. It's not going to be perfectly straight lines, but it's just to give you the gist of it. Okay, that was the old range low. Then we had the range high. Deviation. This is why you have to be careful. This, of course, this could turn out to be a deviation. Even if it goes higher, right? Even if you push a little bit higher like that, could it be like that? And that's a deviation. And then you just come back into the range. Well, I just showed you that the PMIs say that the market is contracting. There's a lot of things that you need to look at under consideration that suggest that this is still a relief rally. This is still a bear market rally until proven otherwise. But I told you guys a long time ago that you want to be bidding within this area over here. And the reason why is because I think that price is going to test the order block, which is over here. And once it gets there, you don't want to now be sitting on the sidelines deciding, is this the start of the bull market or is it a relief rally? Now you don't have options. But if you bid over here where I told you to bid, price is up here, you're now sitting with 40% profit, as am I, and you now have options to decide. Do I want to flip short or do I want to play this a little bit higher? Which is a good position to be in. So in future, take what I say seriously, because I really have your guys' best interests at heart. All right, let's move on over here. Let's go to the Super Guppy. Super Guppy is still green, so everything is looking good over there, suggesting that it is a trending move on Bitcoin. What about Ethereum? Let's look at Ethereum. Is it going to load? There we go. Okay, Ethereum, same thing. Pretty much the same place. Hardly any difference over there. Let's look over here. The RSI is currently crossed down. So it's pressure to the downside according to the RSI in the daily time frame. And that will cross up if Bitcoin pushes back above 28,491. So expect that there is a possibility that you could get a pullback. I'm about to go on the low time frame charts now, and then I'll show you the levels that I think people are going to start to place bids. I'll be watching the liquidations over here to see if there is going to be short liquidations that pop to the upside. We have already had the long liquidations that have taken place. So if we do get that push into that 28, 29K level, expect that to jump up. So I like what Byzantine General says over here. He says that he's looking at the perpetuals, which is the leverage traders, against the spot traders, those who are just buying the underlying asset. And he says that the perpetuals are selling off, spot not so much. The funding is already pretty low. I don't see that this is going to fall much lower. And there you can see it over there. So spot pretty much holding the line. Perpetuals are trying to push price lower. And that opens the possibility that you could get a short squeeze. So if spot refused to sell and it's only being driven down by perpetuals, the leverage traders, then a small spike up in additional spot buying could quite easily create that liquidation cascade. Remember, those who are shorting, in order to close a short position, you essentially have to buy back the position. Buying adds additional buying pressure, and then that's how you get those massive spikes up in price. Okay, levels. What am I looking at? So I'll tell you about the ETH trade as well. Okay, this is what I'm looking at essentially. Very, very simple. It's just been within a range. Let's take off the volume. I have too much stuff on this chart. I also realized that when I rewatch this show on mobile, you cannot see the dark colors. So I will change that EMA. There we go. Now you should be able to see it nicely. So this EMA is the 200 EMA on the 4-hour chart. And then you have the 50, which is the red one over there. Ultimately, we've been stuck within a range. Now, last week, I did outline to you guys, expect that there is a possibility that we'll revisit the middle of the range, possibly even the bottom of the range, because it's been liquidity grab after liquidity grab. First, I was looking at these levels over here where shorts were originally shorting, looking for those guys to get stopped out. So that happened. Price spiked through and came back down. Now I'm looking to this level over here. Is it possible that price will pull back down to these levels? Well, if it does happen, if price does come down to these levels, not only does that line up with that 200 EMA over there, but it's also the range low. So you have a double level of confluence. Additionally, you'd want to see that this gets bought up very, very quickly. You don't want to see price hang around there very long. This needs to happen in a matter of a couple of hours and then immediately reclaim back into the range. That would then open up the opportunity to go long with your stop below the prior wick. If the wick comes down over here, below the prior wick, as well as hopefully below the moving average, which is rising up over time. So keep a close eye out on that. I personally don't really want to see price come all the way down to the range low over here. But if it does, I have a plan for what I'll do once it gets there. I'd prefer to see price hold this. So higher low, call it a double bottom or whatever it is you want to call it, but essentially watching it hold this level over here, and then hopefully it can continue on up. But at the end of the day, what is this? If you zoom out, this is still, okay, a pole. So if you're looking at this as a bull flag, you have the pole, and then you have the flag. It's a consolidation near high time frame resistance, the resistance being at the top. Meaning if you continue to consolidate up against that, usually that's what leads to those next major breakouts. So that's what I'm watching over there. If it does start to hold underneath the this wick over here, so if it starts to break down and hold underneath here, hold under moving average, then you're going to have to cut the position. You're going down to 25K, but possibly even lower. It could be a full 𝗵𝗵𝗃 retrace. What is a 𝗵𝗵𝗃 retrace? Well, you have to look at the picture of 𝗵𝗵𝗃's head. I'm just saying this for the newbies. I know there's always newbies here. Let's zoom out. So imagine this is what 𝗵𝗵𝗃's head looks like, right? Up, you have his hairline, which is usually those consolidations, and then you have full distribution all the way back down. 𝗵𝗵𝗃. Let's put him some eyes. Give him a smile. There we go. Okay, let's go to Ethereum very quickly. Enough with the jokes. I know they're not funny. I've been told by many people I'm not funny. So I'll just try to keep it serious over here. Okay, Ethereum, I did place some bids over here. So I bought right on that white line. Very, very simple trade over here. I'm just going to give you the whole bank shoot. I'd be looking to stop out underneath the 200 EMA, which is the blue one. This is on the 4-hour chart. 200 EMA on the blue chart. If we start to get under there, I'm out of my position. Otherwise, I built up a bit of a long position over here late last night and early this morning. And my target is ultimately to 2K. So let's quickly draw this out for you. I'll give you everything. Long position. There we go. I took it there. 2K. There we go. What is that? 1 to 4 risk to reward ratio. Risk to reward ratio. I think I've had a little bit of a stutter there. Okay. If you want to see the levels, then when I click on this, it's printed on the right. 2K take profit. Entry is at... Well, now you'll be entering a little bit higher. Sorry, guys, it was Sunday. I wasn't able to do like a live stream or anything. And it's still a relatively small position, so I didn't tweet about it. 1765 and then coming down to 1708. I see it as a relatively risky trade. That's why I didn't want to tweet about it. But here it is on the show. If you do want it, that's ultimately what I'm looking for. I want to see a bounce and then a big push up into that region. Okay, quickly, I wanted to very quickly show you. Here we go. Here is the trades. Ultimately, this is the plan and the trade idea for Bitcoin. If you do go into the Discord over there, you'll see it. So price come down, sweep into that 27,280 region or 27,600. But the lowest we'd want to see is 27,280. And then hopefully a bounce off of that, push back up into the range high. So like this. Let's quickly show you again. Here we go. So you're looking at something like this, push back into the range high. So if you see it sweep down, reclaim, so you're long, push back up to here. That's where your take profit for the trade is. But you never know, because we're looking at this as a potential bull flag. It could break out and then you can hold some of that position. So you take half your profits at the top and potentially leave some to ride, even leave 30% of it to ride in case it does break out and go higher up. That's it from me, guys. Please make sure that you give the video a like, hit the bell notification and subscribe to the channel. Where's that bell? There we go. Hit the bell notification, subscribe to the channel, and then also a shout out to our sponsors. Check them out below. If you don't yet have a sign up link for any of these exchanges, consider using these. You get up to $30,000 sign up bonus on Bybit. You get a mystery box on OKX. You're getting $8,000 on BitGet. Prime XBT, you can get up to $7,000. And then remember to protect yourself with NordVPN. All the links are below, Discord, everything. It's all there. That's it from me, folks. I will see you all on tomorrow's video. Cheers for now.